If you are a Bitcoin investor, then today's video should absolutely freaking terrify you, as well as inspiring you to run out and buy some more Bitcoin to stack up some of those sats, because the US government is proposing another $6 trillion freaking dollar spending program, which will see the deficit remaining over $1 trillion a year for the foreseeable future, meaning that inflation is going to run rampant. It also appears that the Federal Reserve has been unable to tame the interest rate beast, and that the US could even potentially be exploring the possibility of negative interest rates, which would be some bad news bears if you ask me. In this video, I'll also be taking a look at the Wyckoff pattern and whether or not we have more pain in store in the short term for Bitcoin. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that is a topic that you would like to learn some more about, then make sure that you subscribe to the channel, click on the thumbs up button, just gently, to let the new YouTube algorithm know that you appreciate this kind of content, and of course click on the notification bell to know when I put out a new video. So let's go ahead and get into the charts. So right now we can see that Bitcoin is still closing under the 200-day moving average. In fact, we've been under it for 12 days now. That is not a very bull markety kind of thing to be happening. Now, we do have these retest situations of the 200-day moving average during a bull market cycle. Generally, we see the price coming down, maybe just touching it for a day or 2 or 3 days and then bouncing back up. 12 days under the 200-day moving average. That is definitely signifying that the bears are in charge of the market right now. Hopefully, we can see this trend line here that has been forming up hold. We do have 3 points of contact now on the wicks here, but there is a lot of fear in the market. There is a lot of panic in the market. Investors are freaking the frick out right now, especially anyone who's been into crypto for like a year or so. It's very interesting to see the sentiment in the market right now. This is actually one of, by many indicators, one of the worst sell-offs to happen in crypto ever. Now, I know we've had situations where the price has gone down more, right? We've seen overall market corrections where the price has gone down by 80, 90%. Some people are still thinking we're going to see Bitcoin nuke another 40 to 50% from here, maybe even getting back down to $20,000. I feel like that kind of sentiment alone tends to be what marks a local bottom in a wider trend. That being said, a lot of people are pointing to the Wyckoff distribution pattern and saying that that is exactly why we are going to see the price of Bitcoin fall even lower. And of course, when Bitcoin gets a cold, the rest of the market gets sick as well. Hopefully, of course, we won't see that maximum pain scenario, but you have to keep it real. Seeing Bitcoin closing under the 200-day moving average for such a long time is not particularly bullish. In fact, we had these retests here trying to get back above it, but really just cementing that as a strong zone of resistance that Bitcoin needs to pass over. Now you can see here, this is the Wyckoff distribution schematic here. So basically the current market structure for Bitcoin has pretty much followed this to a T. Now the main conversation starts to become, have we already seen the phase E? Was that the big sell-off that we saw there recently that brought us down? So was this the phase E section here, and are we now entering into an accumulation pattern? So if that were the case, then maybe the worst of the sell-off is over. We could still see some newer lows, but for the most part, the selling is finished. Unless we are actually just up in this area here, where we're in the sort of the signs of weakness phase, and actually that phase E of the distribution pattern hasn't even really taken off yet, and that's where you're starting to get these calls for Bitcoin to go down to $20,000. What I think is the case my opinion, is that the Wyckoff accumulation period has entered. So we can see that the Wyckoff distribution pattern did play out very, very well. The whales are definitely bringing in those big money strategies. And so what we could be seeing right now is that we did have that selling climax situation by a lot of indicators. That is exactly what happened. It was one of the biggest, in fact, it was the biggest situation of people realizing losses ever in the crypto market. We had an incredible amount of selling and also an incredible amount of buying by whales during that selling climax situation. Now, what a lot of people are now looking for is the spring. So this, as you can see, is at a lower price than the selling climax. Now, the selling climax, just as a reminder here, we got all the way down to around $29,000. So we did break just under $30,000 at the peak of the sell-off back here on the 19th of May. So if, of course, that Wyckoff accumulation pattern is what the market is taking precedent for, then we could actually see this spreading out over some weeks to come yet, right? We could just see a lot of chop coming in over the next few weeks for the market, just ranging here in the $30,000 zone. Few pumps up, few drops down, nothing super significant until the market again just kind of reaches that stage of weakness where it just has this overnight sell-off kind of thing, and maybe we get down to $28,000 or $27,000 or something like that. I don't think we're going to come back down to test $20,000. I think that is overly bearish, but you know, I'll tell you this. If that does happen, I'm going to buy the heck out of that dip. That would be amazing. I would love to see some $20,000 Bitcoin. That would be like a gift at this point. I would love it. Love it, love it, love it. And of course, as the market gets bearish, you also have people calling for $10,000 Bitcoin, for $5,000 Bitcoin, getting ultra bearish. I don't think that those situations are going to come true, and that the worst possible situation, in my opinion, again, based on what I'm seeing in the markets right now, is that we will get this spring situation, which could bring us down into the upper 20s again. That may not happen. You have to understand this. This may not happen. This is just a pattern that we see in markets. There's no guarantee, of course, that this is going to behave in such a way. It's just something for you to think about in terms of how we could see the market playing out over the next few weeks. Now, when we saw the big market correction happen back in 2013, that actually lasted for 210 days from the Bitcoin high to the next high price. So I don't believe that $64,408, I think, is the all-time high for Bitcoin right now. I don't think that is the end. I don't think that is the all-time high market top for Bitcoin, that the price is never going to go over that again. In fact, the fact that you have people out there saying that Bitcoin is never going to go over $64,000 again, in of itself tells me that we're going to go back over $64,000. The only question is, how long does that take? How boring does Bitcoin need to get? How strong does your conviction need to be to make it through what could be a pretty rough phase psychologically in the market, where a lot of investors are going to get shaken out? The ones that don't, of course, will be able to benefit from being able to appreciate their 6-digit Bitcoin, which could still come by the end of the year. And I also want to share this with you too. This is from Rect Capital. He does the technical analysis in the Wealth Mastery newsletter. He said, in Bitcoin's entire history, Wyckoff distribution ranges have never preceded Bitcoin bull market tops. They have, however, preceded a local top for Bitcoin. There's a major difference. And I completely agree with him. And he's, of course, factually right that it has never preceded a bull market top. Bull market tops tend to be very, very quick, dramatic, just blah, kind of blow off events. A Wyckoff distribution schematic, that tends to be a situation where we have maybe a third of the way through the bull run, half the way through the bull run. We have this distribution phase. We have a major sell-off. Everybody loses faith, gets shaken out. The diamond hand hodlers get separated out from the tourists, and the market continues on higher. So the more euphoria and greed that happens before that distribution period, the harsher the come down will be, which is exactly what we're seeing right now. So again, if we do see any lower prices, if I see Bitcoin under $30,000 again, holy cow, I am going to buy the heck out of that. That is what I am watching for right now. I'd love to see it. There's no guarantee that we are going to get those sweet, sweet Bitcoin discounts though, but we can always hope, of course, right? And I just wanted to share this with you as well. All corrections and bearish trends eventually end. No market stays bearish forever. The cryptocurrency markets are not going to be in this bear zone forever. This correction will end, the bear trend will end, we will reclaim the 200-day moving average. The market will go on to see newer highs. The only question, of course, is when is that going to happen? I'm still very, very bullish on the rest of 2021. I still think there's so many great things coming, from the Bitcoin ETF to Polkadot parachains, Cardano smart contracts, Ethereum moving to proof of stake, and much, much more. There's a lot of reasons to still be very bullish on the cryptocurrency markets. By the way, if you want to buy yourself some Bitcoin, some Ethereum, some Polkadot, some Cardano, whatever your fancy might be, you need to get yourself an account over on Binance. It is the best cryptocurrency exchange in the world. And if you use the link down below in the description to start your account, you'll get 10% off of your trading fees and up to $700 in trading bonuses. So go ahead and check that out. Now, I just want to share this with you real quick as well. There was a conversation about Bitcoin on Chinese state TV recently. And the main takeaway from it was that one of the commentators said, if we have a society where Bitcoin is normalized, then it means that we're all going to die. So extreme. So extreme, man. Who are these people? That's hilarious, hilarious. Shills for the establishment, shills for the central banks, shills for the political parties. We're all going to die. Bitcoin. It's bringing the Armageddon around, guys. That's hilarious. Now, want to know what's really something you should be worried about, of course, is inflation, is the economic insanity that the central banks, the political parties themselves are unleashing on the world right now. You don't need political party hacks saying that Bitcoin's going to bring about the Armageddon, right? Bitcoin, it does not mean we're all going to die. Quite the opposite, actually. Assets like Bitcoin help prevent you from slowly going broke over death by 1,000 cuts due to inflation. Now, 2020 was a record year for inflation. We saw incredible spending by governments, trillions upon trillions. I lost track of how many trillions of dollars were printed by governments in 2020. And of course, we had another stimulus package coming this year for the United States. So it's just incredible stuff that we're seeing here. Just unimaginable amounts of money. And the thing is, you have to understand, with all this money is not coming from some magical government savings account. The United States government is currently around $28 trillion in debt in the next few years. The debt repayments, just the debt repayments, not paying down the debt, just the interest on the debt, will actually get to the point where it will go beyond the annual income for the United States. And you have to wonder what happens in that situation. Well, they're probably going to borrow more money and print more money, make the situation even worse until it all just collapses in on itself. You can't keep having a situation where you just keep extending the credit card limit. Eventually, those bills need to be paid. Now, this current plan, I mean, hey, I'm glad the U.S. government's going to be spending on infrastructure and all that stuff. That's cool stuff. But it would be nice if that had come from a savings account, not from creating more debt and more inflation. This is money printing. These are crimes of economic malfeasance of the highest highest order. It is incredible that this stuff is allowed to happen, let alone that it is happening. And look, again, I just want to be clear, the US should spend money on stuff that makes the country better. Why not? But the fact that they're doing that via $6 trillion of debt is not good. Inflation is already going crazy in the USA. It's only going to continue to go crazier. And of course, why do we talk about the USA? Because the USA is the world's biggest economy. So when we see the US dollar getting into trouble, that has repercussions for the entire global economy because it is the oil, the monetary oil of the global economy right now. So this is a very big deal. And it also makes you realize on a personal level, of course, why you should have an asset like Bitcoin, which is an inflation hedge. And I know it's a very volatile inflation hedge, but any of those dollars that I put into Bitcoin, I feel like if I fast forward a few years, it's going to have been a gosh darn good purchase versus holding a large percentage of my wealth in cash. It's the same reason that I buy gold, although I don't buy very much gold, just, a little bit for fun, nowhere near compared to the amount of Bitcoin that I have in my portfolio. Gold's like 1% or something like that. But gold can also be volatile. It just happens at a much slower rate than with Bitcoin. Bitcoin, of course, is an asset that's still in price discovery mode. Inflation, just from the time that I've been born, a dollar's lost half of its value. And it's only accelerating. I haven't checked recently, but I'm sure if I were to check now, it would have lost much more than half its value. And most of that, the biggest losses would have been in the last 12 months because this stuff is just going crazy and inflation rates are going to keep moving up. I remember Stan Druckenmiller last year saying that he could see a situation where inflation rates could get up to like 5 to 10%, which is unimaginably big for a major economy like the USA to have such incredible inflation rates. That slowly melts away your wealth. As a regular person, you need to take charge of that and understand that holding your wealth in cash, it's not a great long-term strategy. And of course, all the companies out there are also going to start taking notice of this. In the US, there's something like $7 trillion of cash sitting in corporate treasuries. Those companies are not dumb. They understand that by sitting on all that cash with all this inflation going on, that they are going to need to diversify at least some of their treasuries away from cash. We've already seen a few companies doing that for the stated purpose of moving away from cash. Obviously, MicroStrategy, led by Bitcoin stacking addict Michael Saylor, has been a big leader in this space. But we have companies like Tesla that did buy Bitcoin with the stated intention of getting away from cash. And even though they sold 10% of their Bitcoin, they're still holding 90% of their Bitcoin. And look, it's not just inflation either. This story came out the other day, and this is, again, one of those just shockers. If the inflation doesn't keep you up at night, then the rates absolutely should be something that's on your radar as well. So this is the Federal Reserve's reverse repurchase facility, basically loaning U.S. central bank money at 0% interest. Now, this has raised concerns in the bond market that the interest rates in the USA could actually fall below zero. Now, this is, if it happens, hasn't happened yet, but if it does happen, super, super big. Now, interest rates being positive, obviously, is a very good thing. That means that if you have money sitting in the bank, you're actually going to make a fraction of money on that money. Now, realistically, in the USA, the rates have been so bad for such a long time that if you have money in the bank, you're not even coming close to keeping up with inflation. So if you want to have dollars that are actually staying ahead of inflation, you need to be getting something like, let's say, even a 5 or 6% rate of return. Preferably, you want to be outpacing it substantially. Otherwise, you should be in some other asset. So you want to have a 10, 12%, for example, rate on your dollars, which actually decentralized finance offers you. But if you're getting 0.01% at a JP Morgan Chase bank account, you're not winning, you're losing substantially every single year because of inflation. 1 Bitcoin is always 1 Bitcoin. 1 ounce of gold is always worth 1 ounce of gold. This is part of the reason why they are inflation hedges, because their value remains solid over time. And if we see negative rates come into the USA, what we've seen in Europe anyway, is that it comes for the big account holders first. So we've seen ranging everywhere from people holding 100,000 euros all the way up to 1 million euros in some areas. But that's been the kind of general range, the cutoff limit. So regular Joe with his little savings account, probably not going to get hit by the negative interest rates, at least not early on. It's all the people who have a significant amount of money. So that means that in the US, these trillions and trillions of dollars, there's like $17 trillion sitting in US bank accounts right now in cash money. That's crazy. So that $17 trillion sitting in US bank accounts, already earning basically nothing, could see it actually going into negative rate territory, which means that every single year you're losing a little bit of money. Now, maybe that's not going to be a lot. Maybe it's going to be 0.1%, and you're just going to go, well, I can just take that loss on my $1 million and the bank, whatever, not a big deal. Maybe it's 1%. Then you start talking about a lot more money going out the door every single year. You suddenly start to realize that if I keep my money sitting in cash in a bank account, I'm losing to inflation, and I'm losing because they're literally taking money out of my bank account due to the freaking negative interest rates. So I need to take that money and invest it somewhere. Now, stocks will of course go up in that situation because all these people are just going to throw their money somewhere where it's going to earn more than 0% or more than negative percent. We're also going to see a lot of people, of course, piling in to gold and into Bitcoin. This is the perfect economic cocktail that will drive people away from holding dollars and into alternative assets. It's happening, it's big, and it's only going to continue to get worse. The debt's never going to be paid down. The financial insanity of central banks, it's only getting worse year after year. I mean, I've been reporting on this stuff for years, and every year it only seems to get crazier. Anyway, those are just my 2 Satoshis. Your question for today: are interest rates and inflation rates, is this something that actually worries you? Is this something that, keeps you up at night? Well, maybe it doesn't keep you up at night, but at least enters into your brain once in a while and you go, man, that's really not good. I should buy some Bitcoin. Let me know down below in the comments section. Thank you so much for watching today's video, and peace out till next time.